I know it's to be true that the only answer to a debt-laden, aging population is what I refer to as more cowbell. Stimulus. Stimulus is the status quo. That's why you like Bitcoin, because you can sense that stimulus is the status quo, the debasement of currency. It's the only way. Because if GDP growth doesn't grow as fast as debt growth, your income is not covering your payments, right? It's as simple as that. And the only way of reducing GDP growth in that formula is debt. So debt needs to grow. The economy needs to grow fast enough that it pays it off. But now each unit of debt lowers each unit of debt gives you less GDP than it did. So it's now $3 of debt gives you $1 of GDP growth. And it's been going like this. Okay, so if that is the construct within which we live, the truth, then at some point, if I look at the future and say, I'm going to live in 9 months in the future, is the central bank raising interest rates? There's almost a zero chance.
Really?
Well, because we've already got to the tipping point where inflation is starting to fall. Just the extrapolation of interest rates mean that they will be below the Fed funds rate by about March or April next year. So therefore, and what, the Fed going to go to what, 10%? What's left? Rubble. People rioting in the streets, right? You can't do it. So you've got to the point, you're getting close to the point where the rate of change changes. And in 6 to 9 months' time, the Fed are likely to have stopped and probably cut.
Bitcoin may follow stocks on a massive bull run as the weekly chart delivers a unique sign of strength. The latest analysis from several well-known crypto names suggests it is time to give up the bear market narrative. Despite everyone talking about a new macro BTC low, possibly at $12,000, new perspectives demand a rethink. Be it thanks to macro or just good old Bitcoin price cycles, there are 3 new reasons to flip bullish on Bitcoin in its current state near 2-year lows. Hello and welcome to Money Talks. In today's video, global macro investor and Real Vision CEO Raoul updates about the importance of central banks and regulation in cryptocurrencies, future economies with tech, and Bitcoin's performance in the coming months after the FTX demise.
Yeah, I'm agnostic too. Just because I think that ETH has the superior benefits because you're building on ETH and we at Real Vision are building our NFT community on ETH. Now, whether you use Polygon in the middle or not doesn't really matter. But, I see people doing it on Solana. Okay, that's interesting. There's not a lot of people doing it on some chains, and Bitcoin, nobody's doing it on at all because you can't, because no smart contracts at scale. But Bitcoin has this other value proposition. That's cool too. But yeah, I'm agnostic. But, our game, I want to manifest my future self. My game is to back the right horse, which is what you're exactly doing with your Bitcoin bet. Is you're saying, you know what, this probably adds to my real estate and the businesses that I'm building and will help me deliver to myself my promises.
U.S. Federal Reserve's or Fed policy and macroeconomic factors are no longer the focal points for crypto traders. That's the message from the derivatives market, which shows no signs of a letup in demands for puts or bearish bets tied to Bitcoin, BTC, and Ether ETH in the wake of the dovish Fed minutes released Wednesday. The persistent put bias indicates the market is squarely focused on contagion sparked by the downfall of Sam Bankman-Fried's FTX, formerly the world's 3rd biggest crypto trading platform, and is likely to find a bottom solely on the back of improving macro conditions.
If you could snap your fingers and make central banks go away, would you?
Probably not. I'm kind of like you. I'm actually quite centrist in most things. I can see the absurdities of everything. But given the basket of stuff, I asked many people who were like, I hate the Fed. I'm like, okay, 2008, what would you have done? Well, I wouldn't have got there in the first place. I'm like, okay, but they did. And how do you get there in the first place? Well, and again, watch that video with Raoul. I'm like, well, that was a factor of globalization. Would you have stopped that and foreseen the outcome of that? And then that was a function of the baby boomers and World War II. And there's so many factors. It's like, no, they're doing the best that they can. Now, nobody wants the debasement of currency, but if you don't, what is the outcome? That's why I ask people. If you don't buy the debt, if you allow the collateral of the system, because the US is the most indebted economy in the history of the world as a percentage of world GDP.
Whoa.
It's over 100% of world's GDP in debt.
That's a lot.
And that's not just, that's the country, the people, the corporations, right? It's the whole lot, the total debt. So what do you want to do? What do you want to do? Do you want to let all of that collateral go to zero, the whole system burn to the ground, and a complete destruction of lifestyle, even whether we're living in a fancy lifestyle driven by debt and other stuff? Do you want to destroy all of that? I don't think you would. I don't think anybody would. So in which case you need the central banker to try and just juggle the bloody balls in the air. And yes, we get angry because it kind of gets the rich get richer because it keeps driving those assets up, and the poor get poorer. So we have to focus somehow on that. But America doesn't like the idea of helping poor people. They think it seems to be, you're a communist. It's ridiculous. You know, why would you not have a welfare state if you've destroyed the ability for wages in real terms to rise over the last 50 years? They've not risen at all. So you need to think about this. And this is why technology people are thinking about universal basic income, because these same people in the workforce are going to compete against robots and have no chance, zero chance. So there is a lot of structural issues here. And I don't think you can do this without government. And I don't think you can do it without central banks.
The crypto market, roiled by the Fed's aggressive liquidity tightening, has long been waiting for the central bank to signal a shift away from rapid-fire interest rate hikes. The market got what it wanted yesterday. A substantial majority of participants judged that a slowing in the pace of interest rate increase would likely soon be appropriate, the Minute said. The Minute also hinted at the lack of support for Chairman Jerome Powell's post-meeting higher rates for longer statement, sending the US dollar and Treasury yields lower and stocks higher.
And I don't think central banks, they've made some mistakes, some big mistakes. They made a mistake in 1997, which was cutting interest rates to defend the stock market. The leverage hadn't built as big by then, and we could have had a clearing event and the leverage wouldn't build up. That's what's happening in crypto, right? The leverage can't build up. It just cannot do it because it keeps getting blown out. Why? Because there's no counterpart. But look at how vicious the cycles are. So do you want the whole economy to go through the crypto cycle? Well, you can do that. That's not having a central bank. There's so many trade-offs, as you suggest. So I think for a generalized population, you would trade smoothness and some level, acceptable level of debasement or inflation, whatever you're looking at, some acceptable level, versus an economy that does this. And you don't know when to save or how to invest.
So, are you holding or selling Bitcoin in this crypto winter? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.